iBonds, which you buy through the US Treasury, are currently paying at 9.62% interest. That's blowing the doors off of your savings account, which is paying you less than a percent interest as of right now, May of 2022. In today's video, I'm going to walk through some of the ins and outs of iBonds. First, you can only buy up to $10,000 worth of iBonds in a given year. You don't have to buy $10,000 worth, you can buy in $50 increments. So if you only have $500 sitting around that you can invest, you can buy $500 worth. It only took about 20 minutes to go onto the US Treasury's website to set up an account, to fund that account with my banking information, and to buy iBonds. So it's a pretty quick process. So that 9.62% sounds really high, but by design it's just meant to match inflation. So if the cost of goods goes up, let's say by a little over 8%, or inflation is 8%, then the value of your money, if it's in iBonds, should grow at that same rate so that you can still buy the same amount of goods as you could previously. So it's not growing your wealth, but it's allowing you to have the same value of wealth you had before, the same buying power you had before, given the fact that the price of goods has gone up, or inflation has gone up. The other thing to keep in mind is it protects your value of your money from things like economic downturns. This money is super safe. It's with the US Treasury, which doesn't default on giving you your money back. So it's much safer than, say, if you've got money invested in stock, you're having to ride that roller coaster of ups and downs. Currently, if you've got a lot of tech stock in your portfolio, you've taken a beating over the last 6 months. And your iBonds, on the other hand, would not have taken a beating during the same period. They basically would have kept the same value of wealth. Another thing to keep in mind about iBonds is you have to hold them for at least 12 months before you can sell them. So don't take emergency funds. Invest with money that you don't need access to for at least 12 months. Then after 12 months, but before 5 years, you can sell it for a slight penalty. And that penalty is basically you lose the interest of the last 3 months. So it's not a huge penalty to sell after 12 months, but before 5 years. After 5 years, you can sell it at any time with no penalty, but iBonds will pay you interest up to 30 years. And the interest rate, currently 9.62%, that's going to be modified every 6 months. So that'll be modified again in October of 2022, and then every 6 months thereafter. And that percentage rate is going to be modified to roughly match inflation. So again, you're not growing the value of your wealth, you're storing the value of your wealth when you buy iBonds. So right now is a perfect time to buy iBonds because the interest rate is so much higher than what your bank account's giving you. Inflation is so high, and who knows where to invest right now. Certainly buying stock is a risky business at this current moment. It's hard to see if it's going to go up. Real estate has been doing really well, but it's hard to know if that's going to continue. If the whole economy collapses, it makes sense that real estate will also cool. And so right now, iBonds is a great place to store some of your wealth. The last thing I'll say about iBonds is, in addition to the $10,000 of iBonds that you can buy directly through the US Treasury, you can buy up to an additional $5,000 using your tax refund. This is something you have to know when you're actually doing your taxes. So if you're interested in this type of iBond, it's called a paper iBond. You have to know in advance, you have to make sure you're going to get refund money from the US federal government, nothing about state here. And you have to fill out proper forms and paperwork. So that's like kind of a more difficult piece, but if you're really looking to maximize how much iBonds you get, you can buy up to $10,000 worth through their website, and up to an additional $5,000 using your tax refund from the federal government. But like I said, you have to make sure to do that when you file your taxes. And one more thing I'll say about iBonds, they are exempt from state income taxes. The interest you get is exempt from state income taxes, but the federal government will tax you on what they're paying you, which I find a little bit funny. They're paying you 9.62% interest, but then they're taking a cut right back for themselves. Thanks for listening. I hope this video helps you protect what wealth you have. If you're interested in more videos like this, please hit the like button and subscribe to my channel. Thank you.